Arundhati Bhattacharya, Chairman at SBI, joins us now on the show. Arundhati, firstly, hi and congratulations. What will be your first priority for SBI as you take charge? Because your predecessor saw asset quality as the biggest challenge and launched a war against NPAs. Will you be looking at taking this forward?
Absolutely. I think we can only intensify the war on NPAs. There is no question of any let-up on that count. It will continue to remain a major priority because it is, I think, at this point, the biggest challenge that the bank is facing.
But Reserve Bank of India has cut MSF rates by about 50 bips on Monday. Will it be of some help to you? And or do you think it is just a sentiment booster and there is scope for deposit rates coming off now?
No, it will definitely be of help to banks that are borrowing a lot in the market. We may not be borrowing that much from the MSF window currently. So to that extent, obviously, it is not going to make a very big difference to us. But having said that, it will help in, we might be able to have a look at our deposit rates to see whether we can bring it more in line. I think it's the right move in the sense that it is definitely going to help liquidity because the CP/CD market will get restored. Many of our clients who are currently in the CP market, or rather they are not in the CP market, they may want to get back into the CP market now that that market will be priced a little lower than the base rates.
Arundhati, one of the biggest things on the agenda seems to be the merger of associate banks. Have you finalized the target? What's the process on that? And will we see it happen this financial year itself?
No, I don't think, there is any way that we can complete the process in the remaining 5 months. The process is pretty long drawn and we have to seek approvals. We have to also ensure that we have the requisite amount of capital. So while we may start the process this year, I doubt very much that it will finish this year. The target again is not something that I have decided on as yet. I am told that there is a report internally, but I have not yet had time to have a look at it. We'll definitely do that, and in the days forward, maybe we'll be able to give a little more clarity on this.
Ms. Bhattacharya, the Finance Minister has instructed, I would say, urged banks to extend lower rates for consumer loans. Is that likely? And are you looking at cutting your loan rates before the festival season demand kicks in? And is there scope for some home loan or auto loan reduction?
See, home loans, I think we are already the lowest price in the market. Accordingly, I don't think we have any space for cutting interest rates in the home loans. Also, in the consumer loan space, we only have a product which is a clean loan. Otherwise, the entire consumer durable space is actually taken care of by our cards company. In respect of auto loans, we will definitely be looking at it to see whether we can do something over there in order to make it a little more reasonably priced for our customers. Having said that, again, I still believe that our rates are pretty reasonable already. But the festival season is coming and we would definitely like to do something for our consumers, and therefore we are looking at it, and maybe shortly we should come with something.
Finance Ministry as well, Arundhati, has been pretty vocal about how banks should be very strict with willful defaulters, and should the management not perform, the bank should take away control from promoters. What is your view, and do you really think it's a viable option?
See, in my view, I don't really believe that a promoter who has not been able to perform, that he has any right to continue with the company. And in this, I think we are all at one with whatever the regulator has been saying and whatever the Finance Ministry has been saying. Now, how to go about doing that? That is something that we really need to work on. I have also said this earlier and I'll say it again. I think we need a better enabling environment to do it. But the fact that we need to do it, I think we are absolutely at one with that. I think such steps are required in the interest of the industry, in the interest of the banking sector. Definitely, we believe that this is a step in the right direction, and we intend to try and see how best we can implement.
Your Q2 numbers are around the corner. Will we see some improvement in asset quality, or still stress on your book quality will continue?
See, stress is there in a lot of sectors, especially, there is a lot of stress in the construction sector. That has not lessened by any means. There is also stress in the power sector, though our exposures are to the better rated and the better power units. But still there is stress there. There is stress also in the iron and steel, but there again we are seeing that the iron and steel units are getting back a little of their pricing power. But stress again, as you know, is micro, it is not macro. So there will be units even in the slightly better performing sectors which might have stress. So yes, the stress is still there. I think it might get worse before it gets better. So I do not really want to project any figures for the quarter. As I said, I would not be able to do that as our books are currently under audit. But overall, as you can see, the stress has not decreased in the economy, and therefore I think it is unfair to expect that it would decrease in the bank.